meeting ID followed by pound. Enter your participant ID followed by pound. Otherwise, just press pound to continue. You have joined the meeting as an attendee and will be muted throughout the meeting.
We're doing this live, folks. Live and interactive. That's just how we do it. If you guys want lighting on, should I put some light on? I get attacked all day long on social media because Zenabis is down. And then when Zenabis goes up 16%, I hear nothing. I hear silence. I just hear silence. All I hear is silence. Gutless. Gutless. Attack day and night about Zenabis. Like I own the company. I'm just a shareholder, man. You guys gonna blame me when stocks go down? Come on, man. You can't blame me when stocks go down. If you're gonna blame me when stocks go down, then you got to make sure you remember who tells you about the stocks when they go up, okay? Just remember that. Remember that. Whatever Zenabis does, I'm an investor, and I'll tell you guys right now, I'm an investor, just like you guys. Whatever Zenabis does, if they go up, I win. If they go down, I lose. So if you go on social media and you make fun of people that are down on stocks, then you're just gutless. I don't make fun of people that are down on any investment. It's not my job to make fun of people when they're down on investments. It's my job as an investor to make money, and it's my job as an educator to teach people how to invest, different ways to invest, different places to invest, different types of investment strategies and opportunities that exist in the marketplace. I am a high times investor. Is it really risky investing? Yes. I've invested in high times. It's been over a year. I still don't have my shares. There's a lot of investments that I make that are highly risky. You don't just go out there and buy a stock because I talk about it. Okay. I want to make sure everybody knows that. Do not just go out and buy a stock because I talk about it. I talk about lots of stocks every single day. I also talk about your stocks, the members, the community. I talk about your stocks. Zenabis is a stock that I own. I own over 20 cannabis stocks, and I want more. High Times is one of those stocks. Aurora Cannabis is one of those stocks. Canopy Rivers is one of those stocks. Hexo is one of those stocks. Agroflora Organics is one of those stocks. Companies that I believe in, companies that I like because I'm a cannabis enthusiast. If they go down, my attitude is I'm going to buy more. I just want to accumulate cannabis stocks over time. Sometimes it's been really good playing this game. Sometimes it's been really bad. The highs have been really, really high. The lows have been really, really low. It is crazy volatile, crazy risky. I know people that have made millions. I know people that have lost millions. Okay? Straight up. That's the markets, man. That is what it is. And more and more people want to be a part of this Rich TV Live army, this Rich TV Live revolution. And we're going to continue to bring you guys the truth, man. We're going to continue to bring you guys the truth. We're in the risk business, man. This is the stock market. Upswing Trading says ZENA screwed shareholders on the rights offering in the present, but I believe overall the company will perform well in the long run. I don't know. I don't know how the company is going to perform in the long run. I think a lot of it has to do with this call. I'm waiting on the call. Have you guys hear anything on your call? Still waiting. Like, what's going on? It's 1:30, 1:31. Are you guys in on your call? I don't hear anything. Oh. What's going on? 1:31. Am I missing something? Should I dial in again? What's going on here? waiting for the call. Are you guys late for the call? Or do I need to call in again? Can someone else dial in and tell me whether or not the call is happening? Whether or not I'm missing the call right now, or if they're just delayed? Am I missing something? Are we at the right time? Is the conference call right now? I am waiting for the Zenabis conference call. I thought it was supposed to be right now, 1:30. I got 1:32 on my phone, and I got 1:30 on my laptop, 1:31 on my laptop. So is there something I'm missing? Can somebody call in and see if the conference line is happening, the conference call is happening? What's going on? I dialed in, and I don't think it's started yet. I'm just going by the press release that was put out. $1:30 PDT. A webcast link will also be available on the Zenabis site. Okay. Oh, here we go. Here we go. Here we go. Better late than never. No, I think a lot of these guys in the sector have a lot of skin. There's a lot of money that's been made in the sector. I think we're about to start with the Zenabis conference call. I hear some jockeying in the background. This is going to be very interesting. Apparently, shareholders have not been decimated.
Welcome to Zenabis Investor Conference Call. My name is Mike McGinty, and I will be facilitating this call as Chief Administrative Officer of Zenabis. On October 24th, 2019, Zenabis issued a news release announcing a rights offering for holders of Zenabis common shares. This news release is available on the Zenabis website and has been filed on SEDAR. The intent of this call is to provide additional context on the rights offering and the progress we have made as a business. On the call this afternoon, we have Andrew Grieve, Chief Executive Officer of Zenabis, Mike Smith, Chief Financial Officer of Zenabis, David Luncor, Chief Revenue Officer of Zenabis, and Leo Bene, Chief Growing Officer of Zenabis.
I met Leo.
Our presenters today will be supported by a presentation posted on our website at www.zenabis.com. Please refer to this presentation during the conference call. In particular, certain matters discussed during the conference call constitute forward-looking statements and are subject to the forward-looking disclaimer contained on slide 2 of the presentation. As described in more detail in that disclaimer, actual results could differ materially from those expected, and the risks that could cause such deviations are set out in the company's base shelf prospectus dated April 9th, 2019, and other public filings that are made available on SEDAR. We also note that figures discussed on today's call are set out in greater detail in the presentation and are qualified by the notes and assumptions identified therein. Those notes should be read together with all such figures. Today, we will begin by providing context on the progress of the business since inception in January 2019. This discussion will be supported by general industry color and feedback provided by the Zenabis management team on the line today. We will then discuss the rights offering, which was announced on 24th October 2019, and why this was the right decision for the company and all our shareholders. I'd now like to turn the meeting over to the Chief Executive Officer of Zenabis, Mr. Andrew Grieve.
Thank you, Mike, and good afternoon, everyone. Thank you for taking the time to listen to our call today. Before we begin, I would like to note that every Zenabis management team member speaking on this call today is also a security holder of Zenabis and has made a dedicated effort to this business. We are grateful to those who have invested in our business, whether in the form of capital, time, or labor, and we thank you for attending this call. We acknowledge this year has been an extremely difficult one for Zenabis shareholders, and we thank you for the support you have provided thus far. I have 3 key points to highlight before we continue with our discussion today. First, we have made significant progress as Zenabis since the amalgamation of Bevo and Sun Farm in January of 2019. We have increased our capacity tenfold, made significant progress on our facilities, and materially increased our sales footprint in a short 10 months. We will discuss our progress on this call. Second, over the course of the year, we had limited traditional options to secure capital, and as a result, we have a capital structure that is not an optimal long-term capital structure. We will further address this when we talk about why we are pursuing a rights offering. Third, we are nearing the end of our operational ramp-up and are much closer to the point where we will be cash flow positive. Today, I would like to walk through the combination of company and industry issues that Zenabis has experienced, as well as our plan for future value creation. With regards to the macro environment, I have the following observations. First, this industry, from a public market standpoint, was predicated on the illicit market being defeated by government regulation, allowing for cannabis to be sold to provinces at prices that are higher than current illicit market levels. The defeat of the illicit market has not been as swift as expected, and in fact has not yet occurred. As a result, licensed producers face intense price competition from the illicit market at this time. This is best highlighted by Statistics Canada data, which indicates that for the third quarter of 2019, the average legal market pricing in Canada was 83% higher than the average illicit market price. Second, our view is that achieving a price that is competitive with the illicit market requires a very significant price discount relative to prior expectations. This is difficult to achieve for many licensed producers, since channel costs within the industry are very high. The excise tax and required packaging costs, in combination with wholesale and retail markups, generally combine to add a very significant component to end retail pricing. For example, when we look at cannabis that is priced at $4.50 or so per gram retail, our perspective is that achieving that price in a market with the lowest possible wholesale and retail margins would require an LP such as ourselves to be selling at $2 net of excise tax per gram. Lastly, equity capital in this market is scarce to non-existent. Recently, there have been a very limited number of equity offerings, and instead, the majority of capital raised by LPs has come in the form of convertible debt. You can see that with convertible financings, where the cost of the convertible financing has been extreme, with up to 2 times dilution relative to the capital being raised and an ongoing debt obligation. To best support our financial and operational requirements, we have reviewed the available approaches and pursued a rights offering as a prudent response to these market challenges. Against that backdrop, Zenabis has pursued an approach of rapidly building a business to the scale that we believe is required to be competitive with other major market participants. When the transaction between Bevo and Sun Farm to create Zenabis was initiated a little over a year ago, the intent of the parties was to raise significant equity capital in the public markets in order to support our aggressive business plan. However, by the time Zenabis had come to market, the amount of available equity capital to support our business plan was insufficient. Nonetheless, as a company, we persevered and sought all available approaches to raising capital, as is demonstrated by the variety of financing alternatives that we pursued. Fundamentally, Zenabis was, and still is, a startup in a new industry. As a result, we've experienced a variety of startup challenges. We have overcome each of these challenges rapidly and in sequence, but each challenge has depleted our available capital. As our presenters look at what we've achieved over the last 10 months, we will also note the challenges we have faced and how we have overcome these challenges. As you can see on slide 3, there are 8 key components to success in the cannabis business. Mike Smith, Leo Bene, and David Luncor will now join to provide their expertise on each of the components of the business. First, I will hand over to Mike.
Thanks, Andrew. As Andrew previously noted, when Zenabis came to market earlier this year, the amount of equity capital available in the market to support the Zenabis business plan was insufficient. In order to ensure continued growth of the business, from October of 2018 through to October of 2019, we raised $238 million through standard bank debt, secured debt, unsecured convertible debt, prepaid supply agreements, and a unity equity offering. With the inability of the markets to provide us with sufficient equity capital, we have used non-traditional capital alternatives in order to minimize dilution. However, this was primarily as a result of the unavailability of simple equity capital. While the capital raised during 2019 has allowed us to continue with our business plan, with our recent operational challenges, we recently made the decision to launch a rights offering to existing shareholders to ensure we have sufficient capital to weather any unanticipated operating issues as we continue to our facility ramp up. Now I'll pass over to Andrew.
Thanks, Mike. As is summarized on slide 4, in January of 2019, Zenabis had just shy of 6,000 kilograms of licensed annual production capacity. As a result of the significant efforts of our construction and licensing teams, we completed Zenabis Atholville substantially on time and under budget when we achieved substantial completion in July of 2019. We've also made significant progress on Zenabis Langley, where 9,900 kilograms of capacity is licensed and operational, and another 39,400 kilograms of capacity has been submitted to Health Canada for licensing, representing approximately 51% of the total design capacity of Zenabis Langley. We have experienced some construction delays and budget overruns at Zenabis Langley, but we are currently on track to finish this project before the end of the first quarter of 2020, with Phase 2B being completed by the end of 2019. By the end of 2019, we expect Zenabis to have 111,200 kilograms of annual capacity licensed or substantially completed and submitted for licensing. Now, over to Leo.
I am joining you this morning from Atholville, New Brunswick. Before leveraging the expertise from the Bevo team, harvests leading up to March 2019 experienced significant variances in outcome. While we continue to experience some variance, the number of harvests that underperform our targets has declined. This gave us the confidence in August 2019 to revise our design capacity at Zenabis Atholville upwards from 34,300 kilograms to 46,300 kilograms, an increase of about 35%, based on our cultivation outperformance during the second quarter of 2019. We then outperformed the revised design capacity in Q3 of this year by 25%. Our cultivation outcomes in the last 12 months are summarized in slide 4 of the presentation. While we will experience a variety of harvest outcomes during the ramp-up of Phase 2B and 2C at Zenabis Atholville, we believe that sustained outperformance is likely in the medium term. Primarily, we continue to focus on ensuring our cultivation program is efficient, both from a yield and cost standpoint. Our drying and trimming teams continue to focus on maximizing dry yield per plant, while ensuring that we deliver the highest quality product for our customers. Our drying and trimming teams, working closely with our cultivation teams, have been successful in optimizing dried flower to trim ratios from total dried plant output, ensuring we maximize the amount of saleable, high-quality product harvested from each plant.
Thanks, Leo. While packaging was not an issue in the first half of 2019, given our limited volumes at that time, we encountered packaging issues in the third quarter of 2019 when we replaced our existing primary packaging equipment at Zenabis Atholville. Primary packaging output was approximately 6,300 units per day in September 2019. Our output increased to 14,056 units per day in the 23 days ending October 23rd. In addition, we packaged an average of 20,069 pre-rolls per day thus far in October, with a peak of 43,449 on the 17th of October. This illustrates the ability of our team to solve operational issues in an extremely short period of time. We are confident that packaging will not be a bottleneck for our business.
Thanks, Andrew.
Now,
continues
I will
to
hand
work on
over to
refining our fulfillment process and the ability to promptly meet consumer demand. Our sales team has been working daily with our operations team to ensure that there's a strong relationship between our two teams. This will continue to be a focus of our organization as we continue to scale our production capacity. In the last 9 months, we are happy to report that we've significantly increased the number of provincial and territorial supply relationships that we have in Canada, from 2 in October of 2018 to 5 in January of 2019 to 10 partners today. All of our provincial relationships are summarized in slide 9 of the presentation. We're proud to be one of 6 Canadian licensed producers that has relationships with 10 or more provinces and territories, including a Shoppers Drug Mart agreement for medical cannabis supply. Despite legal market headwinds, we've received strong interest from provinces and continue to receive meaningful demand from our provincial and territorial counterparties for our products. The recent strong interest has been focused on our value brand, Re-Up, which was just launched in New Brunswick and Saskatchewan. And after launching this brand in New Brunswick, we've been able to rapidly secure nearly 40% market share. The brand has been attractive to consumers given its price point, which is competitive with pricing in the illicit market, and its quality, which remains high despite the low price point. We're looking forward to securing listings for Re-Up across Canada by the end of 2019. Selected provincial feedback outlined on slide 10 of the presentation aligns with our expectation that we will be able to achieve strong sell-through during the remainder of the year.
Thanks, David. Before we speak about the specifics of the rights offering, we would like to discuss our current position in the Canadian cannabis industry and how we believe we compare to other licensed producers. Mike Smith will begin by discussing our capital efficiency.
Thanks, Andrew. As I previously noted, we did not have the same access to equity capital that other producers had given the relatively late formation of Zenabis. As a result, we have been prudent and efficient with the capital we raised. As is outlined on slide 5, based on the most recently disclosed share capital for Zenabis, our current licensed annual production capacity of 57,000 kilograms, and the most recently available public information for other producers, we believe that we have been one of the most efficient producers in the Canadian cannabis market in terms of utilization of equity for the build-out of capacity. While we recognize that we have utilized alternative capital sources to fund our projects, such as debt and prepaid supply agreements, these funds were raised with limited shareholder capital.
Thanks, Mike. On slide 6, we have summarized the implied valuation of the rights offering, assuming full uptake of the rights offering at the pricing of 15 cents per common share. This pricing was established in the context of a falling equity market for the industry and was set at a level that we thought was unlikely to be undercut by falling valuations. On this slide, we've also shown multiples based on Zenabis' current trading enterprise value, excluding the Zenabis propagation business. As can be seen, based on the implied valuation of the rights offering, we currently trade at a significant discount to other licensed producers. This is especially apparent when we also take into account our propagation business, which on a last 12 months basis has generated $9.6 million of EBITDA. When we adjust our enterprise value for the propagation business, we arrive at multiples that are a significant discount to the remainder of the industry.
Thanks, Andrew. We believe the key financial metrics in the cannabis industry to determine long-term success are cash cost of cultivation and annual SG&A per gram of capacity, as these metrics are the key metrics that determine the break-even selling price for a producer. As is summarized on slide 7, based on the cash cost of cultivation last disclosed for comparable licensed producers, Zenabis is one of the most competitive producers on a cost of cultivation basis in the Canadian cannabis industry. We note that cash cost of cultivation is not a standard industry metric and that different producers may use different methodologies, but we nevertheless believe that the slide is illustrative of our competitiveness. Upon licensing of Part 2A at Zenabis Langley, we expect the economies of scale to result in Zenabis being one of the most competitive producers when considering annualized SG&A per gram. Combining these two metrics, we believe we are well situated to earn strong margins in a price-competitive market. Over to you, Andrew.
I hope that the color provided on the cannabis industry, the 8 existing components of our business, and how we believe we are positioned in the market has been helpful to you as stakeholders in our business. As we have noted on this call, we believe we have made significant progress as a business over the past year and have overcome a number of meaningful challenges, such as access to capital. We believe that we have worked to position ourselves as a cost-efficient producer in a competitive industry. We recognize that many of you joined this call to understand what led us to pursue a rights offering, which is what we'll end our call with today. As we announced on October 24th, shareholders of record at the close of business on October 31st, 2019, will each receive 1 right for each common share held. We understand from the TSX that due to trading and settlement mechanics, which are out of Zenabis' control, the common shares of Zenabis will begin trading without an entitlement to a right as of market open tomorrow, Wednesday, October 30th. And at the same time, the rights will begin trading on the TSX. Shareholders are encouraged to contact their investment advisors with any questions they may have about trading and settlement mechanics. In advance of discussing our decision to pursue a rights offering, it was important to provide context on our existing position in the market and the 8 components of our business. As many of you know, on August 21st, 2019, concurrent with the announcement of the debt financing from RC Morris, we announced that we had secured sufficient capital to achieve an annual design capacity of 143,200 kilograms of dried cannabis and become cash flow positive. At the time, it was our intent to not raise incremental capital. Unfortunately, we then encountered the packaging issue, which was discussed earlier on this call, and identified budget overages at Zenabis Langley, which resulted in a deferral of our final phase at Zenabis Langley to the first quarter of 2020. Given these 2 developments, Zenabis determined it was in the best interest of the company to secure additional capital to ensure that we had a sufficient cash cushion to deal with any additional unanticipated issues which may arise on our path to becoming a cash flow positive, self-sustaining business. Since announcing the rights offering, we have received 2 questions from investors, primarily relating to 1, our selection of a rights offering to raise capital, and 2, the pricing of the rights offering. I will address both points. Consistent with our past commitments to investors, Zenabis determined that it was not in the best interest of shareholders to raise incremental debt from non-traditional sources, given additional debt would increase cash burn until we became cash flow positive, increase our overall leverage, and, given the requirement to raise convertible debt, would have been meaningfully dilutive to shareholders. Given existing market conditions and based on discussions with market participants, it was not possible to complete a unit offering. Convertible debt was an alternative, but it would have been extremely dilutive to existing shareholders while further increasing our debt burden. As a result, we made the decision to pursue a rights offering where, 1, we knew insiders would commit a minimum of $6.2 million in capital, and 2, shareholders would be given an option to protect their ownership of Zenabis from dilution, the option being to exercise all rights granted. In order to make exercising rights as attractive as possible for existing shareholders, Zenabis made the decision to price the rights at a significant discount to market. In addition, the pricing was established in the context of a falling equity market for the industry overall and had to be set at a level that we thought would continue to represent a significant discount to market when potential further erosion in industry valuations was taken into account. This was done to offer shareholders the most compelling opportunity possible to maintain their ownership in the business. The pricing was also comparable to the true cost of a convertible debt financing based on convertible debt proposals considered, when taking into account the warrants and the embedded call option associated with the debt conversion feature. To be clear, if all existing investors exercise their rights, then there will be no dilution to existing shareholders under the rights offering. I will now pass it back to Mike.
Thanks, Andrew. To provide some closing remarks, I hope it is clear from this call that the entirety of our team is very excited for the future of Zenabis. We remain focused on executing on the 8 key components of our business and delivering value for our shareholders. If you have any follow-up questions from this call, our investor relations team can be reached via phone at 1-855-936-2247. or via email at invest@zenabis.com. Thank you for your time and continued support.
That's the call. Interesting. So that is the Zenabis rights offering presentation conference call. I actually found the presentation. Kind of wish I knew about this before. I would have shown it to you guys. It breaks everything down here. Interesting. Very, very interesting. So essentially what they're saying is they're coming out and saying that they had no choice. They had to do this because the market in the cannabis sector has changed, and the early movers have early mover advantage also with the banks. And the banks have already picked their horses. And that's why Aurora Cannabis has 3 of the 5 largest banks funding them. And some other big players have big banks funding them too. So essentially what they're saying is similar to what I'm hearing from other companies. It's not easy to raise capital right now. And that's why their stock has gone down, is because they're really struggling for cash. So this is going to be interesting to see what's going to happen here with Zenabis. Now, at the same time, they are trading at a very low multiple compared to their peers. So there could be some serious upside here with Zenabis if they finally get things going and they start growing their revenues and become profitable like they're saying they are trying to become. So we'll see what happens. I think that it'll be interesting to watch. Like I said, I'm strictly an investor and I'm a shareholder, and I want to have a place where we can talk about these situations. What do we do as shareholders? What are our options? You know, they just broke it down. And if you actually go to the rights offering presentation, I might have to do a video on this for you guys. It actually breaks it all down. Now, keep in mind that they are buying, the insiders are actually buying, and it breaks down all the insiders and their positions that they're purchasing. They're buying these rights themselves. 6.3 million worth. And assuming this deal goes through, the company will then raise 20.6 million out of the 20.8 million to do this deal, which if they need $20 million to get them where they need to go, hopefully that gets them closer to profitability, and hopefully we see this thing turn around. Now, I'm not suggesting anybody buys the stock. Zenabis has been a huge nightmare, but if you look at the presentation, it breaks down their cost per gram. It breaks down what the cost per gram will be with some amendments, which are going to be happening. It shows their cost per gram when you compare them to all of their peers, where they're essentially as low, if not lower than anybody, like anywhere. So from that perspective, it looks pretty good, but can they control the markets? Can they get control of the stock market? This is the $1 million question. You can put charts together that say, yeah, we're undervalued, but at the end of the day, are you going to make money? Because if you don't make money and you have too much debt, eventually you can run out of money. This is the biggest thing now with Zenabis and with some other companies that exist in the marketplace. And this is why we're seeing this squeeze for money. And you heard it on the conference call. There's a squeeze for money. There's a squeeze for money. A lot of companies got the funding early. And the companies in America are still waiting for the Safe Banking Act to get approved, to get passed, so that they can get major funding. So all the companies that had the early funding have huge first mover advantage. That's what's happening here. So the companies that have huge first mover advantage right now are Kronos Group, Kron, ACB, CGC. They all have huge first mover advantage. Kron has $1 billion partner. Aurora has 3 of the 5 biggest banks in Canada and hundreds of millions of dollars in credit lines. And Canopy Growth has a $1 billion owner. So in Constellation Brands. ACB has huge debt and goodwill, yes. But ACB is also the biggest cannabis company in the world in 25 countries and has enormous $1 billion revenue potential, which is right around the corner. So ACB is going to be a giant, and it costs to be a first mover. That was the whole vision that Bruce Linton had. Bruce Linton had a vision that he was going to build a global giant. And yeah, it was going to cost money in the beginning, but eventually you got this huge machine that's just going to be pumping out money forever. That is the advantage of being first. And Zenabis, they got into the game in January after their RTO. And essentially what they're saying on the conference call is that they don't have the advantage that some of the other companies do with money. And because of that, they had to do this rights offering to raise enough money so that they could keep moving forward with their business plan. Will they be able to achieve their business plan? I don't know. But what I do know is that they have a lot of good partnerships. They have a lot of good relationships. They have huge facilities, which I've seen physically. I've physically met Leo. Seems like a very simple guy. He has a huge facility in Langley. Everybody's can go and look in Vancouver at the facility. It's enormous. You literally have to drive from one side to the other. That's how big it is. So I still think there's a future here, but I would feel more comfortable if they could get some serious money behind them, like $1 billion partner or some serious bank financing. That would be the perfect scenario for them to really feel comfortable, because it's never a comfortable feeling when a company says that they don't have money. Yvonne Diesel says, Rich, you think Hexo will go bankrupt? No, I don't think Hexo will go bankrupt. I don't think Hexo will go bankrupt. I think that these companies are going through a tough time. And I remember just last year that everybody was funding cannabis companies. And now all of a sudden, it's like nobody wants to fund cannabis companies. It's just the way it goes, man. Cannabis used to be the biggest thing in the stock market. Everyone was talking about it. All of a sudden, cannabis dies, goes down for months, gets crushed. Now everybody is down. Everybody loses. Everybody's hurt. Everybody feels bad about cannabis. And now they're boosting up oil and gas. Even though oil and gas and energy stocks were down for years. And they're boosting up gold. And gold was down for years. This is just the game, man. And the key is to identify the best companies at the lowest prices. And they're going to beat them up until eventually they want to make them run again. And when they run again, the people that are buying at these lower levels, and I'm not suggesting that this is the bottom, it could go lower. It could go lower. Anything can go lower, but it also could go higher. That's the game. That's the market. We're in the risk business. It's literally like a casino. It is gambling. So what do we do here, Rich TV Live? We create a community. We create a platform where we can all come in and talk about it and say, hey, I like this stock, or I own this stock, or I'm thinking about buying this stock. What do you think? And other people can give you their opinion so that you can get a group's opinion about a stock as opposed to just your own opinion. Because your opinion might be good, but sometimes it's good to hear what other people think. Like when Zenabis was at $6, nobody ever dreamed that we would see Zenabis at 15 cents. Nobody ever dreamed that we would see Zenabis at 15 cents. We still haven't seen Zenabis at 15 cents, but who knows after 139 million shares hit the market? You know, who knows what's going to happen here? I have no idea. This is the first time I've really seen a rights offering like this and participated in it. Every time I see something like 139 million shares are being sold, that can never be good. So it's going to be interesting to see how this works. Alex Castillo says, which is why key, diversify, 2, incremental buys. I agree with you. And just buy good companies that you really like and you believe in over time. Don says, look at BLOZ. It's going to be a big moneymaker. Yeah, I think there's a lot of companies that have huge potential. The key right now is we need to identify the companies that are profitable and the companies that are going to be profitable. If there's a problem with money right now and there's a squeeze, they're squeezing these companies. It used to be easy to raise money. Oh, you're a cannabis company? Here's some money. All of a sudden, oh, nobody can get any money. So all these companies are struggling for money. This is what I'm hearing. This is what everybody's been saying on all the conference calls. There's a reason why I listen to these conference calls. I try to listen very, very carefully to the words they use, the description of what's going on in the landscape of the marketplace. They're saying that it's becoming hard to raise money. That means there's a squeeze happening. That means there's a squeeze happening on these companies. It's not going to be easy for them to raise money. And then the big boys have a huge advantage now because they can go and buy the small companies. They can go and acquire the small companies. This is the game in the stock market. And the people with the most money make all the rules. So 6 months ago, all you saw on the TSX, the Toronto Stock Exchange, was cannabis stocks. That's all everybody was talking about. Now, everybody that's been holding cannabis stocks has gotten decimated. So the conversation is totally different. Now guys are talking about gold stocks. They're talking about oil and gas stocks. They're talking about tech stocks. They're talking about billboards, big board stocks. They're talking about cryptocurrency. If you diversify and you have all the assets, then you are always going to be okay. But at the end of the day, even if you diversify, you got to diversify into the best companies. And you got to try to buy them when the market is down. So right now, the cannabis sector is down. Now is the best time to buy in the cannabis sector. When stocks are at 52-week lows, you give yourself the best chance to win when buying those stocks. But don't chase a stock that keeps going down every day. Let it create a floor. Let the stock identify a floor. Andy Hoyle says, I think they got big balls. They laid it out there. So you in at 15, Rich? Yeah. I mean, assuming the stock stays over 25 cents, I'll be buying at 15. Absolutely. 100%. Have to. Have to. It's just the way I trade. I have to. Alex says, we will wish we could have bought more at these prices the day the sector becomes like alcohol and cigarettes. I agree with you. Well, that's the thing, Scott. It's like they're forcing investors to put up more money. To become long-term shareholders with them because they're buying 30% of the rights themselves, which is interesting. I think it's very interesting. Matt Barone says, it's obvious there is only going to be 3 or 4 successful companies in Canada, 3 or 4 in the US. The rest will fade away into oblivion. Yeah, I don't see 3 or 4 companies in Canada or the US handling this huge business. I don't think that's possible. There is flower. There is cannabis-infused beverages. There is hemp. There is CBD. That's 4 different businesses. There's extraction. That's 5 different businesses I just listed. You're saying that 3 or 4 companies are going to do all 5 of those businesses? I don't think so. There's 400 companies, and every day there's new companies coming public. It's not going to be 3 or 4. It's going to be a lot more than people think, because there's going to be companies that are going to be experts in something. And there's going to be so much research, so much analysis that's going to go into the cannabis sector. I don't think people understand how big it is. Consolidation has already started taking place. There is so much when it comes to cannabis, and it comes to CBDs, and it comes to hemp. There is so much research, science, breakthroughs that are going to be happening. It's mind-boggling. And to be a part of it, no one ever said it was going to be easy. Kent Block says, with overall market this high plus wheat stock suffering, why not wait till these really small companies get shaken out or show some real signs of potential? I mean, yeah, you can wait. You can do whatever you want. Nobody's forcing anybody to buy anything. Conchi says, Fividia is a company we should be looking at. Hey, man, I'll look at anything that has the chance to make us money, up or down. Alex Castillo says, how will the purchase work? You go into your trading platform, select buy ZENA, and we'll have an option there to buy 15 cents, 66% of volume we have. No, you're going to have to contact your broker. Yvonne Diesel says, Rich, in the next 6 to 8 months, I'm sure they will try to scare people in the cannabis so they jump the ship and lose money. I think that's already happened. It's already been 6 months. That's already happened. It's already been 6 months. Matt Barone says, ACB, Canopy, Afria, and Kronos. Tilray does everything. Those will easily cover the Canadian market. What about extraction companies? You're not mentioning labs. You're not mentioning Radiant Technologies, which works with Aurora Cannabis. You're not mentioning Balance Growworks. They're just going to disappear? I don't think so. Michael York says, compounds and entourage effects they haven't discovered yet. There's going to be so many breakthroughs, scientific breakthroughs happening in cannabis. It's going to change the world. CBDs is the $1 trillion industry that nobody talks about other than me. CBDs is huge. I've been talking about CBDs for years. CBDs is huge. So big. Hey, man, I'm here, man. I got no problem investing in cannabis stocks. I'll be investing in cryptocurrencies too. I'll be investing in big board stocks. I'll be investing in real estate. I'm always going to be investing. Gold, oil and gas, whatever's going to make us money up and down, we can make money. That's a guarantee. We can make money up and down. Remember that. CBD is going to be bigger than flower. Mark my words. CBD will be bigger than flower. CBD is already starting to become bigger than flower. I'm already talking to a lot of people that are telling me that they're starting to get more CBD and edible purchases than they are starting to get flower, because you're starting to get an older customer now in the cannabis sector, and they don't want to smoke. They're going to eat the edibles. They're going to drink the beverages. They're going to take CBDs. It's going to be huge. It's going to be so huge. Ben Stocks says CBD is huge. Any thoughts on Heritage? I know that they've been getting destroyed. Other than that, Andy Hoyle says Halo, baby. Yeah, I think Halo has a chance to be a good company. The stock hasn't done well, but the company itself, I think, has a chance to do well. Hopefully the stock turns around, because those are some really cool guys and good guys there at Halo, and I'd love to see them become huge players in the industry, and we can have them on the show consistently. And that's like insiders in the industry. And they said, Kieran said himself, he said, it's getting hard to raise money. He said it. It's getting hard to raise money. And he's in America, so he knows what's up. Five Finger Limited says, made 10% on ZENA today in Mason's account, 4,300. Yo, congratulations, man. Really happy for you. That's good. That's great work. That's great work there. Congratulations to Mason, the Rich TV Live #1 youngest fan. Ross Fleming says, what's the top CBD companies in your opinion, Rich? Well, MYM Nutraceuticals has been doing well, but they've been getting beat down overall. But overall, they have a chance to be a good CBD company. That's why the stock's going up. So keep them on your radar as an undervalued company. As a bigger boy, Charlotte Webb. C-Webb is the biggest CBD company in the world. The biggest public CBD company in the world. They're huge. Absolutely huge. Yvonne Diesel says, Rich, I am 54 years old. Just hope that I will be able to retire. I hope you can retire too. What I can tell you guys is I've been in this sector for years, okay? I remember in 2014 to 2017, you couldn't even deposit anything with cannabis related. We had to stay away from any company that had anything cannabis related. Then there was this huge boom where it was like, it went from one extreme to the other, where it was the hottest thing since sliced bread in the last couple of years. Up until this March, it was the hottest thing since sliced bread. Then all of a sudden, they pulled it back. I remember very vividly them saying that they didn't like the fact that on the Toronto Stock Exchange and on all the exchanges, all everyone was talking about was cannabis. There was nobody talking about gold. There was nobody talking about tech. There was nobody talking about oil and gas in Canada. Everybody, all the money, all the smart money was going into cannabis. All of a sudden, that stopped and it changed. And now the money shifted back into gold, oil and gas, cryptocurrencies, technology, and cannabis has been looked at as, oh, look at CanTrust. Those guys were growing behind walls, right? And, oh, you don't want to invest your money because banks invested in CanTrust, and then CanTrust did what they did. So there's a lot of catalysts that are going to turn this around. 2017 was a start of it really getting crazy, where we saw cannabis growth go from $5 to a high of $70 last year. Or was it this year? This year. They went to a high of $70 this year. So we've seen like this huge run for 2 years, and it's been up and down. In 2017, there was ups, and then there was downs, and then there was ups again. 2018, there was ups in the beginning of the year, then there was downs, then there was ups again. And 2019, there was ups in the beginning of the year, big ups, 52-week highs everywhere. January, February, March, 52-week highs everywhere. And then what we've got now, the last 6 months of red. All right, party people, that's the ZENA call. I got to run. You're not winning, you're not watching. This is your boy Rich from Rich TV Live. Bringing the winners. We bring them to you first since 2017. Check the statistics. We brought you Aurora Cannabis first. We brought you Village Farms first. We brought you Tilray first. We brought you GW Pharma first. We brought you Twitter first. We brought you Facebook first. We brought you Amazon first. All these picks, TWLO2 in 2017. Chronos Group, 10x. Afria, 10x. We brought you Organigram when it was at $1. Afria when it was under $2. All these picks, they've all had crazy highs. Now they've had some serious lows, and we're right now at the lowest we've been for a lot of stocks ever. And the lowest we've been for many companies since 2017. So I think this is the time to load up. I think this is the time to buy. But hey, it's getting tight out there. They're getting squeezed. Could they get squeezed some more? It's possible. Could they get squeezed some more? Anything is possible. Tax loss season's coming. So anything is possible. Anything is possible. We could see lower lows, but I'll guarantee you this. We will see 52-week highs again. I'll give you this guarantee. In the sector, we will see 52-week highs again. And when we do, it will be epic. And then the conversation will be totally different. I promise you, the conversation will be totally different. I'm a cannabis enthusiast. I always have been. I always will be. I'm a true cannabis enthusiast and investor. I'm going to be here on the down days. I'm going to be here on the up days. I'm not beating my chest because Zenabis is up 16% today. I'm not crazy. Okay? I'm not crazy. But you know what? It's better that they're up than they're down. Let's just put it like that. It's better that they're up today than they're down. And hopefully we have more green days ahead. Let's just put it like that. Hopefully we have more green days ahead. That was the Zenabis rights offering conference call, live, interactive. Your boy Rich with Rich TV Live. Thank you guys for watching. If you're not winning, you're not watching. We bring the winners and we bring them to you first. Since 2017, we've been bringing them to you first. And I promise you, this cannabis sector, we will see 52-week highs again. We will see companies crush their 52-week highs. Remember where you heard it first. Remember where you heard it first. When is it going to happen? It's going to happen. It's going to happen. It'll happen. It'll happen. When everybody least expects it, when nobody's talking about it, when everybody's giving up on it, there will be a cannabis stocks resurrection.
And CEO interviews.
There will be a resurrection.
Rich TV Live.
Some companies will fail, but some will succeed and be huge. The key is to find the winners, invest in the best.
They're trying to
It's true.
get the lawyers. They're trying to put losses on these companies. Meanwhile, what they're trying to do is create a distraction so we don't take advantage of the cannabis stock resurrection. That's really what's going on. That's the truth. This is your boy Rich.
Hey, one more quarter of pain before some pleasure? It's okay.
One day we gon' fly. We gon' make this money. We gon' live all life. We can all get high. I'ma spread my wings. I'ma feel alright. One day we gon' fly. We gon' make this money. We gon' live all life. We can all get high. I'ma spread my wings. I'ma feel alright. Shortest can't take us down. It's the time to buy and put your money in. Let the profits maximize it. We the people stay true and we don't stand for lies.
Gotta believe in the cannabis, man. People are not gonna stop smoking cannabis.
We wanted this for years and they thought we were joking.
Nah.
we were always patient. Cannabis for you and me and all the nations. So all my brothers and all my sisters, go on and light it up. Go on and take it to the head when the times are tough. I know we buying in the red, that's the sign of luck. But don't panic, we gotta manage, the time is us. And I don't care for the lefts and all the market makers. But I swear they nuts, I call them salty haters. Big pharma trying to get him for a piece of it. Because they know the medication, we don't believe in it. I'm so happy it's over, all the prohibition. And now we here, it's Rich TV, the coalition. There's no knocking to stop it because we on a mission. Teach the people they spreading lies, it's a contradiction.
You want to make money, invest in the top cannabis stocks in Canada and the United States that are revenue generating. Invest in the best because the best is blessed. This is your boy Rich.
Everybody's saying they're gonna buy the shares. Everybody's saying they're gonna buy the shares.
It's true. Get ready for the resurrection. Peace.
I'm talking Jordan Belfort. Let's open up scenarios. Wolf of Wall Street, and I ain't talking about DiCaprio's. The man predicted markets. He knew it was going to explode. He knew.
I think the ratio is 86%.
Was making money and he knew to crash your homes. Oh, yeah, these are the big boys. He also predicted the crash of bitcoins. That's a big short. Stop acting like a big dork. I'ma get this pot, no lie. I need a big fork. I know about the tactics. The shorters making money off the people's back is horseshit. I'm telling you, take caution. Everything is so corporate. I'm trying to make enough money to give to all the poor kids, and that is what the herb is for. Helping people feed the poor. All we need is life, so stop thinking that all you need is more. And now we here, but our past, yeah, we can't forget. It's time to grow, and you know we getting out of debt. One day we gon' fly, we gon' make this money, we gon' live our life. We can all get high, I'ma spread my wings, I'ma feel alright. One day we gon' fly, we gon' make this money, we gon' live our life. We can all get high, I'ma spread my wings, I'ma feel alright.
The real Wolf of Wall Street loves cannabis stocks. Jordan Belfort believes in cannabis stocks. The new Wolf of Wall Street loves cannabis stocks. Rich TV Live loves and believes in cannabis stocks. The question is, do you believe in cannabis stocks, and will you achieve ultimate wealth through the cannabis stock revolution?
Boomer.
It's true.
It's coming.